Thanks for staying with us on News Central now. The Central Bank of Nigeria has modified its position on cryptocurrency holdings within the nation and requested that banks ignore its previous prohibition on cryptocurrency transactions, effectively stating that current global trends have demonstrated the necessity of cryptocurrency regulation. This is according to a CBN circular signed by the bank's Director, Financial Policy and Regulation Department, Haruna Mustafa. Although the CBN emphasized that Nigerian banks and financial institutions are still prohibited from holding, trading, or transacting in crypto assets from their accounts, the new guidelines will allow virtual asset service providers, VASPs, which include cryptocurrencies and crypto assets organizations, to now open accounts with Nigerian banks. And now Dr. Iwa Salami, Associate Professor, University of East London, joins me to discuss this. Thank you so much, Dr. Salami, for joining us.
Thank you for having me.
My pleasure. Now, Dr. Salami, what do you make of the CBN's new stance on cryptocurrency and other virtual assets, considering the fact that there was a previous prohibition against that?
So I think it was sometime in 2021, February 2021, when the original position was taken by the Central Bank of Nigeria, which basically tantamounted to, if you like, banning crypto assets, primarily because, of course, financial institutions were prohibited from holding accounts for crypto asset service providers or virtual asset service providers, including, of course, cryptocurrency exchanges. And obviously, that act in itself, because it would inhibit the transactions that those virtual asset service providers are able to engage with, was deemed as obviously prohibitive and also deemed as almost like an outright ban. And sometime in May 2022 last year, the Securities and Exchange Commission of Nigeria, which is the capital markets regulator, then passed this quite, I'd say, detailed provision regulating crypto assets. And so if you kind of put the two positions together, there was a bit of a conflict, because on the one hand, you have the bank regulator, the central bank, sort of saying, actually, we don't recognize, we're not going to allow financial institutions to transact with these institutions, with the virtual asset service providers, basically, not recognizing the existence, if you like. And then you have this comprehensive provision passed by the Securities and Exchange Commission, basically saying otherwise, the direct opposite. And so for a while, there was that conflict between the two regulators, almost as if there wasn't communication between the two of them. And so the market, and I dare say, actually, for anyone studying the development of the crypto assets industry in Nigeria, was really waiting to hear some sort of clarification as to the two positions. And so it's nice to hear that the central bank has now come around, because what the central bank is basically saying is that they and the Securities and Exchange Commission of Nigeria are on the same page as regards the regulation of crypto assets. And so I think it's a good thing. So I think the turnaround really, in my view, was to really align the position of the two regulators, which were really in conflict. So other maybe rationales, I mean, one of the things the circular had said there was that global trends is the reason why they've had to change their position. And yes, global trends, because there have been quite a few incidents that have happened in crypto assets industry for the past couple of years. I mean, this year was quite eventful. We saw the collapse of quite major crypto asset exchanges, such as FTX, that then had a ripple effect on certain financial institutions, and therefore, those obviously were things that facilitated the regulation, both domestically in certain countries and even internationally. So the trends that are going on internationally is that a lot of countries have begun to regulate crypto assets service providers, and not just only that, at the international level, we're seeing international standard setters already coming out with their recommendations. So there is regulation happening across the board, and for alignment of regulation, it's important that I think Nigeria comes on board with that as well.
Okay, Dr. Salami, it still leaves a bit of puzzlement though, because if the circular says banks and other financial institutions are still prohibited from holding, from trading and or transacting in virtual currencies on their account, then what exactly has changed? What is the Apex Bank saying in essence? Does that mean that while they may not be permitted to deal in cryptocurrencies, they may facilitate payments for cryptocurrency exchanges, or what's the resolution there?
And that's exactly what it is. So they're not permitted to trade, hold, or transact, which basically means banks are not allowed to, to engage in investments, if you like, involving crypto assets. So they're not allowed to actually, invest in crypto assets, hold crypto assets, trade in crypto assets, but they're allowed to facilitate payments for their clients who might be crypto asset service providers. So basically, things like opening an account for banks and other financial institutions who are virtual asset service providers or crypto asset service providers. Totally different from them holding crypto asset service, crypto assets and transacting with those assets directly.
Right, and
clarification has been made because, of course, prior to now, there's different ways crypto asset service providers can carry on transacting. And I mean, the nature of the industry is such that we're not dealing with brick and mortar type institutions. The transactions that happen, on things like blockchains and that we can't see, we can't touch, and therefore can be run from different jurisdictions. But the clarification is good because what it means is that we now have a situation where those financial institutions can actually engage, can open accounts effectively in the country and not feel like they're violating any significant laws or rules that the central bank has placed. But I think beyond all of that, I think what we really need to be looking at, and particularly as regulators and also, as people that are interested in the space, is what drives the fears amongst central banks and monetary authorities to actually come very hard, if you like, on crypto asset service providers and the whole crypto asset industry in itself. And fundamentally, it's really the fear that a lot more people will be using and transacting in crypto assets than transacting in their fiat currency. And this has been the primary fear across the world with respect to crypto assets, or cryptocurrencies, as some people like to refer to them. And so the idea around that really is what spurred on the central bank digital currencies. And of course, Nigeria has passed this, central bank digital currency, the e-naira. And the main issue here is, if you like, the competition that may arise from the usage of digital currencies, okay, and whether that's the increased use of the ones that the monetary authority doesn't actually have a lot of control over, and aligned with or in comparison to the usage of, the central bank digital currency. That's the ones that have actually been issued by the central bank. And it's so important that, central banks actually get that right, because as it is, what we have is we have different types of digital currencies, or crypto assets, as we may like to refer to them. Sometimes we have direct competition with fiat currencies. So we have stable coins, which really are crypto assets that have been pegged sometimes to fiat currencies, or assets that we recognize in a traditional finance, in a traditional financial market. And basically what that then means is we have almost, similarities between how people that hold these types of currencies, stable coins, can actually transact with those stable coins without actually needing to transact in fiat currency. So a typical example is what is known as USDC, and USDT, which I think is what really central banks, and particularly African central banks, really need to be looking at to understand and appreciate what they're really confronted with. And basically, the reason why is because it's easier to access these types of digital assets or crypto assets. It's easier to access a USDC, for example, which can pretty much do everything, a US dollar can do.
Right.
Except for the fact that it's easier now to actually engage in global transactions. So if I hold a US, if I have a crypto asset wallet, for example, with an exchange, and I hold some USDC, and I'm a small business, for example, who transacts in buying, stuff in India, for example, it's easier for me to easily transfer USDC, which really is the dollars. The dollar,
right.
like dollar is pegged to the dollar.
Right.
And the problem with that is it's easier for me to access and make payments using that mechanism rather than actually accessing dollars in the fiat version of it.
All right, Dr. Iwa Salami, that's the much we can take for now. Associate Professor, University of East London, thank you so much for your time with us on the show, and thanks for helping us understand better what is meant by lifting the ban and how this cryptocurrency can now be traded. Thank you so much for joining us once again.
Thanks for having me.
My pleasure.